Hey everyone, welcome back to the channel. If you're new here, we break down the latest stock market news, earnings reports, and investing trends. So if that's something you're into, make sure to hit that like button and subscribe. Today we're diving into Meta's Q4 earnings, future growth potential, and stock valuation. The company has been making big moves in AI, advertising, and the metaverse, but is the stock still a great long-term investment, or is it already pricing in too much of the future? Now let's take a look at how Meta generates its revenue and break down its business segments. First, digital advertising. This is Meta's main revenue driver, accounting for around 97% of total revenue. Facebook, Instagram, WhatsApp, and Messenger all run highly targeted ads using AI-driven algorithms, making Meta one of the most powerful advertising platforms in the world. Businesses pay to reach specific audiences, and with billions of active users, this remains Meta's biggest cash cow. Second, Reality Labs. This is Meta's bet on the future with VR, Arkansas, and the metaverse. This segment includes products like the Quest VR headsets, Arkansas glasses, and platforms like Horizon Worlds. Right now, Reality Labs is operating at a loss, but Meta is investing heavily in AI and virtual experiences, hoping this becomes a major revenue stream in the future. Third, subscription and other revenue. This includes services like Meta Verified and business tools for WhatsApp and Instagram. Meta Verified allows users and businesses to pay for a verified badge, priority customer support, and increased reach. On top of that, WhatsApp Business API helps companies interact with customers, generating additional revenue. So while advertising still dominates Meta's revenue, the company is diversifying with AI, subscriptions, and the metaverse. The big question is, will these new segments turn into billion-dollar businesses? Or will Meta remain dependent on ad revenue? Now let's see what Mark Zuckerberg had to say in Meta's latest earnings call and go over the key insights from the company's leadership. Meta is making a massive push into AI, and 2024 could be a defining year for the company. Meta AI is already the most widely used assistant, and the company believes personalization will set it apart, allowing people to customize their AI to match their interests, personality, and culture. On the AI model side, Llama 4 is in development and is expected to be the most advanced open-source model yet, featuring multimodal capabilities and agentic functions. Meta also predicts that by 2025, AI-powered engineering agents could reach the level of a mid-level software engineer, which would be a huge breakthrough in automation. Beyond software, Meta is betting big on AI hardware with Ray-Ban Meta AI glasses. This year will determine whether smart glasses become the next major computing platform, or if it's going to take longer to gain traction. Now let's take a look at Meta's latest segment results and see where the company is making money and where it's losing it. First, family of apps. This includes Facebook, Instagram, Messenger, and WhatsApp. This segment continues to be Meta's cash cow, bringing in $47.3 billion in revenue, up from $39 billion in Q4 2023. Advertising revenue alone hit a massive $46.8 billion, proving that Meta's ad business is still growing fast. FOA's operating income skyrocketed to $28.3 billion, meaning this segment is more profitable than ever. Second, Reality Labs. This is Meta's big bet on the future, covering VR, Arkansas, and metaverse projects. Revenue here came in at $1.08 billion, almost identical to last year's $1.07 billion, but the losses keep piling up. Reality Labs reported a $4.97 billion operating loss in Q4, showing that Meta is still heavily investing in the metaverse with little return, at least for now. Total revenue for the company hit a record-breaking $48.4 billion, with operating income reaching $23.3 billion. And check this out, Meta's operating margin is now 48%, up from 41% last year, meaning they're getting more profitable even while investing billions into AI and the metaverse. So, Meta's core business is stronger than ever, but their future bets, like Reality Labs, are still a long way from being profitable. The question is, will the metaverse ever pay off, or will it keep dragging Meta down? Now let's take a look at Meta's financial outlook for Q1 and what they expect for 2025. For Q1 2025, Meta expects total revenue to be between $39.5 billion and $41.8 billion. That's 8% to 15% year-over-year growth. For the full year, Meta isn't giving a specific revenue forecast, but they believe the investments they're making in AI, advertising, and their core platforms will continue driving strong growth throughout 2025. On the expense side, Meta expects total costs for 2025 to be between $114 billion and $119 billion. The biggest cost increase will come from infrastructure spending, including higher operating expenses and depreciation, as Meta continues expanding its AI capabilities and data centers. So, while Meta sees solid revenue growth ahead, rising infrastructure costs could weigh on profitability. Meta is at an all-time high, but even at these levels, it's still growing revenue by 20% year over year, which is seriously impressive. If the company can continue this strong revenue growth, and if its massive AI investments pay off, Meta is still a buy on every dip. They're leading in AI, expanding their ad business, and pushing into new technologies with Reality Labs, so there's still plenty of potential here. But what do you think? Is Meta still a strong long-term investment, or is it getting overvalued? Drop your thoughts in the comments. And if you enjoyed this breakdown, don't forget to like, subscribe, and hit the bell so you don't miss the next stock analysis.